Welcome back, my beautiful friends. You're listening to A Moment of Zen right here on 710 WOR, the voice of New York, iHeartRadio. I'm your host, Zen Sams. Up next in our Business and Buzz segment, brought to you by Revere Securities, we're featuring Grace Gong, founder of Smart Venture Media and the host of Smart Venture Podcasts, a top 10 VC podcast. Grace is featured on the list of LinkedIn Top Voices in Finance for 2022. She's also a best-selling author of The Last Key to Success and How to Be a Venture Capitalist, released on Amazon. Today, we're chatting about BlackRock's latest moves, pro-investment tips, and how to stay afloat a looming recession. According to the Financial Times, BlackRock's chair and CEO Larry Fink has warned that negative markets had a substantial impact on the world's largest fund manager last year, with assets down 1.4 trillion on the year and Q4 revenues down 15%. Now, that's according to Emma Dunkley's Financial Times report. While the job cut numbers are not huge, the move reflects a growing feeling that 2023 could represent a painful period of reckoning for many. Here to chat finances, investment strategies, and staying ahead of the curve is the awesome Grace Gong. Welcome to the show, my friend.
Hi, thank you so much for having me. Thank you, Zen, for the kind intro.
All right, Grace, let's dive right in. BlackRock, the biggest fund manager, at least one of the big giants, has been one of the biggest winners from the stimulus-fueled bull market of the past decade or so. But we now are seeing that not even a giant like BlackRock is immune to 2021's profound change in market conditions. What do you say to this? And do you feel that there's a recession looming?
I definitely feel like we're not in the best shape of the economy. So although, we're not really not everyone's investing really bullishly. However, I feel like when people are really focusing on investing in the actual technology innovation. Is that last year we've seen a lot of PFPs or like NFTs that are raised millions of dollars, but this year we'll probably see more of the infrastructures as well as like the more actual technical innovation that are happening are getting actually the funding that they needed.
Yeah, so you're really big on the tech stuff here. I could totally relate. I mean, I think that that's an interesting industry and sector. Right now, all eyes are on the US Federal Reserve and whether a pause or even a pivot in its series of aggressive interest rate hikes is coming. And while many investors are yearning for a return to the years of what we call the Fed put and rising markets, should this not prove to be the case, then asset managers are likely to feel more pain this year. Typically, I know that a lot of the industry managers that we deal with on our show are regular contributors, such as the Kyle Wolves of the world. They tend not to panic in times like this. They're cool as cucumbers. They know the game very well. But from your perspective, from an entrepreneur, from a venture capitalist perspective, you've written books. Please share with us some strategies that can help us navigate these perhaps rough times with a smooth sail. Other than the tech industry, what kind of investment, I mean, which investment industries, for one, should people be focusing on, and what kind of time frame should we give the market to really respond to some of these strategic investments, like perhaps in the tech industry and placements that you're talking about?
Yeah, totally. I think that's a really great question. Speaking of investing in any industry, I personally think there has never been a better industry to invest in than yourself. I think like in the past, when there's an economic downturn, a lot of people start thinking of, consumer goods is a sector that will never really go down because we'll always need toilet paper or anything that we'll use in our home. And then there is the healthcare industry, which means, people will still get sick during this economic downturn, and people are not going to not stop spending money on that. And then there is the traditional education sector. A lot of people started going to business school because of maybe they're getting laid off, or like they want to actually just, instead of going to work in the minimum wage job, they will just invest in themselves in education. However, nowadays, education could come from every different format. So for example, listening to this podcast is a really great way to learning everything for free, right? So I think personally, I think the best investment what you should make right now is probably to invest in yourself. That being said, there's about maybe two different ways that you could invest in yourself, right? One way is to essentially, in the past, when we think about the five people around you, people always say, the five people around you are the average percent of the 5 people around you, and that's in the past. The 5 people would be your classmate or like your neighbor or someone who's actually physically around you. Nowadays, it's like the 5 people on the internet. It could be, let's say, you really admire someone and then you listen to their talk every day, or you join an internet Discord group or like any sort of community that you could absorb information from. So I think that's both of them are really good investment of your time to, find that group that are things that you want to learn about and then actually join them. And it's essentially free, that you don't have to pay any money beside your time. And the second way of investing in yourself is investing in your personal branding. And that, so like there's a survey that Gen Z is creator economy is one of the sector that Gen Z investors are most passionate about, because of, nowadays people growing up, they don't really want to be doctor or lawyer. They want to be a YouTuber, or they want to actually have their own following. We've also see a lot of content creators, such as there were in VC the industry, there were a lot of people successfully started $1 million funds by starting a podcast or like starting their own media presentation online. And there were
Yeah.
also, yeah.
Let's talk about the $1 million funds, because at this point right
Mhm.
now, as a result of these what we call headwinds,
Mhm.
managers and consultants said that there will likely be more mergers and acquisitions this year,
Mhm.
what we call M&A. And although higher interest rates and costs of capital mean it's unlikely that mega deals are going to be struck,
Mhm.
rather top line revenue and margin erosion, as well as organic growth challenges, those are going to encourage smaller asset managers to really reevaluate their strategic plans and consider becoming a buyer or a seller. So the case for M&A, mergers and acquisitions, for these mid-sized players, what we call in or around 500 billion assets under management, AUMs, is very strong. So what do you say to this? And is this a good area for investment, mergers and acquisitions?
I definitely can see why people think is going to be trending next year. So, because of in general, like when interest rate goes up, people are less likely to take a loan, but like they are still needing the financing since they have a really low valuation. The venture capitalists are probably not going to spend that much, money. Everybody's waiting for what is the lowest point for me to buy, and but however, the companies are. Looking for to see when is the highest point so I can sell, or like I can raise the next round. So it's kind of like a conflicted point there. I can see things in both ways. So last year there were a drop in like 2022. It was the global IPO dropped by 31%, and then M&A deal were dropping 8%. So essentially last year people are not making a lot of moves as like the year before. However, we also see some really big deals that were happening. So, for example, Adobe acquired Figma for $20 billion, and this year, when the year just started, like we've seen news that's, Microsoft were trying to acquire 49% of Chat GPT, and for $10 billion. And so those we can see these like these kind of conflicted image. So there is some people were still very bullish on the market. I've seen those big tech companies and the people actually like with buying power are still like actively looking for really good like internet properties to keep on their investment. However, there's also other companies that are just not making moves because people are waiting for the lowest point
Yeah.
to buy.
It's a tough period. It's a kind of wait and see period, right? So, another interesting area, and we'll talk about some disruptive industries. We only have about 2 minutes left, but also the growing adoption of actively managed ETFs should come as no surprise, because major active mutual fund providers have entered the ETF fray by converting or cloning existing mutual fund strategies or adding these new strategies. And the improved tax efficiency, that's a whole different thing, of ETFs, was a quick win for investors in these strategies. So we're going to see much more choice in the active ETF realm and ways in which investors can control and manage their overall portfolios. So we're going to probably see this kind of new area of investment vehicle come to the rise. But talk to me. We have 2 minutes left. What emerging disruptive industries do you think have the potential to outperform the current market conditions? What financial vehicles and industries should be a better hedge against inflation than most, in your opinion?
Yeah, totally. I think that's another great question. So, in terms of emerging market, I personally really bullish on the artificial intelligence market. Because of this year, there's so many big news that are happening. I think there's the giant jump between like this year in terms of like, the technology difference from previous years is this year, like all the artificial intelligence companies are trained by machine then like and then they're more sophisticated and complex that are actually mimicking humans way of thinking instead of in the past, like when people are thinking about artificial intelligence, people think anything bot related are not necessarily the positive feeling that people associate it with. So for example, when you chat with something, when you're going on a phone call and then when you hear it's a robot on the other end, you probably won't really have you probably are looking for, to get the human solution instead of just keep waiting in line. However, this year, the robot solution becoming a lot more humanized. So that's one of the biggest shifts. So I'm personally in terms of like the technology wise, and I definitely feel like that's a really good sector to pay attention to. And as well as like technology during the economic downturn and like when we're, I think it's a really great way to help people with efficiency. People like to, spend less to do more. So like technology,
Yes.
yeah.
So artificial intelligence and technology. There you have it. We are out of time, Grace, but I wanted to say thank you so much for coming on. Very interesting perspective, very insightful, full of information. You're awesome.
Thank you. You too.
Absolutely. So, guys, listen, what we extracted from this amazing interview is that it's not all doom and gloom this year. Those running ETFs, private market funds, and sustainable investments are expected to attract the biggest inflows in 2023, according to market analysis reports. I think that the world's transition to renewable energy from fossil fuels is also the beginning of a new sort of industrial revolution. Investors are supporting that in spirit and increasingly with their portfolios. Global impact investment funds surpassed a total of $1 trillion in assets for the first time in 2022. And the momentum, well, it's just going to continue on to this year. That was our Business and Buzz segment brought to you by Revere Securities. That was the awesome Grace Gong, founder and CEO of Smart Venture Media. You could head directly to her website at gracegong.com, or you could check her out on Instagram or Twitter at Grace Gong CEO. You're listening to A Moment of Zen right here on 710 WOR, the voice of New York, iHeartRadio. We'll be right back after this.
A Moment of Zen is brought to you by Revere Securities. Revere is committed to building a relationship of trust in which they work closely with you to help you define your objectives, explore alternatives, and choose the financial and investment strategies that are most appropriate for you. Go to reveresecurities.com.